Well, good morning and welcome everybody, and welcome to the pre-market rundown for Friday. It is what, February 5th, 2021. I'm Andrew Horowitz, and we are talking about stocks. We're talking about futures. We're talking about gold. We're talking about everything in between. Lots to talk about today. We may get into some areas that you're interested in. Hopefully so. Of course, this is for educational purposes only. It is not an offer to buy or a solicitation to sell anything at all, and I want to make sure you are aware of that. All right, so what's going on with everybody? How is everybody doing this week? There's a chat box that we can look at and talk to me with anything that you want to talk about. If you have any things that you want to look at, we have some people already putting in some ideas in there, and we will look at those. In addition to that, I'm just kind of wondering, with all that's gone on during the last week or so, and with all of the things that we've seen happen with the stocks like, well, they're called the meme stocks, right? The game stocks, stops, the AMC, Build-A-Bear, BlackBerry, etc. How are you guys doing? Did you guys trade that? Were you looking at that? What is it that you are thinking? What is it that you are doing? I mean, you know, what we saw was this incredible move on the upside for many of these names. And then from there, what we saw was that there was obviously the incredible drop that we saw as well this week. And is it something that you're involved in? Is it something that you are staying with? Is it something that you're even getting near? Something that you're totally thinking that, this is not something that I want to deal with. And with that, what's interesting is that a lot of people decided to, hey, you know what? We're going to get involved in this. We're going to play in this area. But at the same time, a lot of people said, you know what? This is just too hot. I'm not working with it. The truth of the matter is, unfortunately, when we look at the screens and we look at the charts and we look at what's going on, it was very difficult to get involved. The moves that happened, the halts that happened, the timing of all this was very difficult on a lot of people, because even with the best of indicators, even with the best traders, this moved really fast, and that was a problem. And yeah, a lot of people are mentioning on the chat that, hey, I wouldn't get near this. I wouldn't do anything to do with this. I wouldn't get near this with a 10-foot pole. It's something that I think a lot of people were interested in. But as a trader, sometimes you need to step aside. Sometimes you need to say, you know what, I'm not dealing with this because this is just too hot to handle. There was a lot of cross currents, a lot of things going on. And when you see what was going on last week and this week with these names, and realize that there's going to be some scrutiny, there'll be a lot of people with concerns, a lot of people trying to bet on either side, so a lot of money going into it. Sometimes, like I said, it's best to just sit on the sidelines, see how it plays out, and we'll go from there. Anyway, we did put up the disclaimer. I want to mention what's going on in the pre-markets right now. As we saw, the jobs number just come out. See the futures on the Dow Jones up about 150 points. ES up about 18.5. The Qs continuing their move on the upside, up about 38. The NASDAQ. Everything's going up. We got gold going up. We got oil going up. We got Bitcoin going up. Everything seems to be in rally mode right now. And that is a product, of course, as we know it, of the free money, liquidity, and the potential for stimulus, not to mention some of the good earnings that came out. Now, let's talk about what happened last week. For those of you that weren't totally involved or paying attention or even interested in this, obviously these major names that were moving 100, 200, 500% in a week, like GameStop and AMC and Bed Bath Beyond Vile, Build-A-Bear, Nokia. The list goes on for about 10 or 12 different names, maybe even a few more costs. These had incredible ramps over the last week, and as would be expected, they couldn't hold. And we can look at any of these stocks and kind of see what's going on, and just quickly looking at like KOSS, they all look about the same, right? That's not the right stock. That's the right stock. Okay, they look like this. They look like this. They look like that. The list goes on and on and on, and we've seen this for many of these names, and what's gone on is a mass, incredible amount of effort put into, let's get this going. But I gotta share something with you. When you see this going on, it's really tempting. It's really tempting to get involved in something like this. Use your disciplines, use the indicators. If you want to trade it, understand something. There's risk. That's fine. Understand what your level of risk is, that you want to assume every single trade that you do is no different than the last. every transaction, either whether you're doing intraday trading or swing trader, even a little bit longer term, you have to look at something. You have to ask yourself before you get in the trade, am I willing to lose X amount of dollars on this trade? Look at the chart, see where the support levels are. And if you say, yeah, hey, I think the trade-off, the risk-reward trade-off is really something that I can handle, well, then go ahead. It's great. If in fact you think that, well, if this starts dropping, I'm out, you are setting yourself up for absolute disaster. Because what's going to happen is your mind is going to start ticking. You're going to start thinking, hey, I got in here, I made a couple of bucks. Okay, maybe I should get out. Maybe I should stay in. I don't want to lose the money. And you're constantly overthinking the situation. When you do that, what happens is that you have what's called weak hands. Not those diamond hands, not the diamond hands. You have weak hands. And those weak hands are going to cause you to actually move out of the market at the wrong time and cause yourself not only to lose, but then a bit of a head trip. You know what I'm talking about, right? You understand all about this. You have to make sure that you're utilizing these indicators and you're utilizing these kinds of disciplines, if you will, to make sure that you are on the right side of the trade. And when you look at the autopilot that we have here, right? What do we call these? Right on the top here, we call these biases. Understanding where you want to be on the trade. So what's the bias? See the word bias. It's a long bias, a short bias. It's a long alert. What's going on here? So when you look at this and you think about where you want to be, understand where the long-term and the short-term trend is. Understand your risk. Understand the downside you're willing to take. And also don't get too greedy on some of these things. Look at the upside. You can always take a little bit of profit off and let some of the money run. I will tell you, we just did that yesterday on this stock, Digital Turbine. This stock has been an absolute monster for a long time that we've held this. There really hasn't been a lot of indication to totally get out. The uptrend's been attacked, maybe a little bit here back in, what was that, in November, I guess October, November of 2020. There was some reason to start thinking about pairing it out, but look at what happened overall on the daily. And I think probably if we switch this up to a weekly basis, again, just a monster of a chart here. Trim some of the position as this thing spiked on earnings yesterday. But point is, that didn't necessarily get out of the full position because we still have a significant momentum from the aileron, which is a second piece of this indicator suite that I've added. So that's an add-on. So this is the Commander series, which you're looking at. Hopefully everybody has gotten at least their 10-day free trial and has gone on and gotten in on the actual the subscription. By the way, anybody that subscribes, new subscribers to the Commander series, get a 4-hour complete course that gives you some real good backdrop. There's also a lot of different videos available on TriggerCharts.com. If you do subscribe, it's $149 a month. Listen, one trade should make all your money on this deal. And if you're not willing to spend $149 a month on your trading to make you a better trader, give it up now. Seriously. I mean, come on. It's not that expensive for this entire suite and all the education that you get with this. Let's be honest. So if you haven't done so, get your subscription. Start the process. We'll give you a 4-hour course. Send in that you've subscribed to support@triggercharts.com, and we will get you that 4-hour course. We're always here, by the way, to answer any questions you have as well. But moving back to where we are, we had Groundhog Day this week, and it kind of seems like it's Groundhog Day in the markets, where we had a really rough month towards the end of the month last week in the markets, and then markets decided to just turn up. And that is what we're seeing, this grinding pattern. This grinding pattern with markets. Getting back to this for a second, let's just look at the SPY here, and let's look at this on a weekly basis. Okay, look at the grinding, constant grinding. It moves lower and grinds higher. Kind of tails higher, moves lower, grinds higher. So you're seeing this grinding process, and even when you do see something like a significant drawdown in the markets, well, what happens? You see this drawdown right here, and then almost a mirror image in the same symmetry time range that you saw. So we're talking about 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5, 6, 8. To get back up to the top, it's a lot faster on the way down than always is the case. and then we start moving back up. And even if we go out a little further on this chart, you can see a lot of these similar grinds, right? Where we just get this move down, then a move up, a move down, then a move up. Kind of a symmetrical move right here. Again, where we see that, where there is this symmetrical move right there, right? You know, these little bitty symmetrical moves. Here, here, right here, then here. Markets don't want to go down right now. That doesn't mean they won't ever go down. That doesn't mean there's not going to be a major hiccup here. But the fact of the matter is that when you look at what's going on right now, there's a lot of excess liquidity in the system. How many times have we talked about this? We've talked about this 100 times. Talked about this excess liquidity, and that's what's driving markets. If you really think about what's going on, once again, we're seeing that, you know, Dow Jones is popping again this morning, and there was kind of a good number from the aspect of the unemployment rate, which was only 6.3%, that came in today, but yet only 49,000 people were added to payrolls, and December was modified lower, worse than it was. Hopefully you followed some of these setups from last week. Show of hands. You can raise your hand. I think you can raise your hand here somehow. Raise your hand or just click. How many of you took some of these setups last week? You know, we talked about Space and Workhorse and DM and a couple others last week that I told you I really liked, and those things have rocketed higher. Well, Space rocketed higher. Of course, you have to do your own research with this, okay? And a lot of you just raised your hands that you did, so I'm very happy about that. The setups that we're looking at are those names that are continuing to see upside opportunities in this. So, yeah, you're welcome for that. Got a bunch of people. Let me scroll here. Wow, a lot of people took some of those trades last week, so they did really well. All right, what are the themes that are going on? We're watching the yield, watching the dollar. The yield has been ticking higher on this market right now. If you look at like TLT, which is the long bond, for example. What we're finding is this roll. See this roll down again today because yields are actually going higher, and they're selling off bonds. You can see that sell-off in the bond space right there over the last few weeks. I mean, let's kind of just look at this. You can see this on a monthly basis. We hit that high, of course, back in the pandemic, but now we're starting to roll over, even with the Fed saying that they're going to keep rates at low levels forever, basically, is what they said, and that's something to think about. You know, where are they going to come in now? As we are starting to see that there is a rolling, and even though it's still very low, listen, the 10-year is at 1.15. That's still extraordinarily low. That doesn't mean that we're in for an imminent crash of bonds, but it is saying that the Fed has lost a little bit of their power involved here. What are they going to do? Possibly come in with yield curve control, possibly come in at capping of rates, maybe in some more quantitative easing. Seems unlikely due to the fact that we know, okay, we're getting probably through the reconciliation process of $1.9 trillion stimulus bill that is coming out over the next few weeks. And what's after that? Maybe that's going to be it for a while because a lot of people are starting to wonder if it's kind of enough already. Fundamentals mattering again? Yes and no. The SPAC market is still playing pretty hard, but the memes came down. All right. Pent-up demand is the talk, the narrative, the discussion that you're hearing on a lot of different news media, and as well as analysts are talking about that. You know what? There's an incredible amount of opportunity here that's starting to really blossom because with the vaccine rollout, herd immunity, people getting, you know, kind of places opening up. Interesting how all of a sudden, like a New York and a LA start opening up once we have President Biden in there, which is really a little weird because their numbers don't look a lot better, but okay. It is interesting to watch the fact that there is the idea that maybe some of these lockdowns are not necessary. I'm not judging. I'm not saying. I'm not even falling on either side of the discussion. I can tell you that I'm in Florida and it's like a free-for-all down here. Nobody seems to care about, you know, what's going on. Things are open. Places are going. You got to be careful. I'm not getting into this discussion. Make your own decision on all this. Economics. Initial claims are sub 700,000. Yesterday, inflation. Shortages we're seeing. There's chip shortages. Ford talked about it. GM talked about it. Several of the car manufacturers. We're seeing the shortages and pricing increases in a lot of different areas of the commodities, in the housing market, et cetera. Prices are going up. So with that, I had a great discussion this week. If anybody knows Anthony Pompliano, the Pomp, big crypto dude, he's involved in a lot of the DeFi space, as well as looking at areas of the digital marketplace, digital world, digital finance. He's going to be on the Disciplined Investor podcast this week. If you're not a subscriber, stop for a second, write it down. The Disciplined Investor podcast. Get it on Apple, get it on iTunes, get it on Spotify. Subscribe to it so you don't miss this episode coming up this week. We also had Ross Gerber on last week, by the way, on that podcast, which is something you should listen to, the Disciplined Investor podcast. All right. What else do we have here? Inflation. Okay, ISM Composite. We saw Inline. When you take both sides, you take the ISM, the manufacturing and the ISM non-manufacturing or services. Inline, one was a little bit light, one was a little bit heavy, so that's good. Kind of averages out to the composite being in good shape there. Next week, we have CPI. So we're going to see the CPI numbers, the inflation numbers. Inventories are going to be coming out, wholesale inventories, initial claims, University of Michigan for February. Earnings, we saw some big numbers from tech last week. Let me tell you something. Some of the numbers that we saw this week, I thought were absolutely astounding. The numbers from Google, for example, I mean, that blowout number was amazing. Not to mention Amazon, which, you think that a company is going to come in with, let's say, $1 of earnings, and they come in with $2. I mean, double up. And revenues, you think they're going to come in with, 50 million, and they come in with 75 million. Analysts aren't even close to what's going on in the technology area, and a lot of people are wondering, why is that going up, and why do we see the NASDAQ outperform so much last year and continuing to outperform the base markets this year? Well, the big names are doing pretty darn well. Snap did report today, down a bit. There was some concern about what's going on with the Apple iOS and the potential for the privacy, which I am all in favor of the tracking, the opt-ins, and companies like Snap and Facebook are absolutely apoplectic about what's going on because it's going to be a problem for them. So we're going to talk about a variety of names here, and I mentioned, of course, the 4-hour course. Let's take a look at Snap this morning. What's happening? Down about 5%, not a big deal. After it kind of got toward that all-time high, trend has been positive. It's been a good but choppy aileron. Again, aileron gives us a momentum, direction, bias, and the trend of what's happening when you combine the Commander series with its altimeter, and you look at the autopilot, and you look at with the aileron. It kind of gives you a really good three-dimensional picture of support and resistance. That's the key when we look at volume-based support and resistance, volume and price-based. Really, when we combine it up in our algorithm, and then you add on top of that the momentum process to it, you kind of have all sides covered, right? It's kind of like direction and speed. It's direction and speed. Where is the ground? Where is the ceiling? Where are we moving? We're going forward, backward, are we stalled? So it gives us all of that inside of all three of these. Yes, the aileron is an add-on indicator. It's something that I think you really should take a look at, something pretty important, but take a look at that on that. All right, let's take a look at what else we got here. I talked about space, SPCE, monster. This is just a daily chart. Just a daily chart. We called this back at about 24, now trading at about 55. Right now, it's kind of in no man's land, I'll call it here. We got some support down about 48. Well, let's kind of cover it exactly. We have supported a 47.86. Currently trading 55, up about 73 cents in the morning here in the pre-market. But really, I would start to load up back at those levels. Let's kind of enable the radar here. You can see this radar shows a lot of this purple and blue area, which is very limited volume compared to where we saw the volume down at about 32 and change. This is a little bit of a dangerous territory for this name. It's something if you did make this significant profit, I would really start to think about trimming some positions here, which I did actually on the way up here. Still hold a position in this, but I think that, this is a spec trade, and it's been a great spec trade. A little bit frothy and a little bit, I would say, volatile for some people's blood, but yet it has been doing pretty well. Right now, right about here, right in the mid part of the range. But again, there's really not, look at this weekly move here. There's a lot of blue. You want the fat part of the belly. When we see this B, if you see this, if you can notice this, I'm going to draw this. I'm going to try to draw this. Let's see. All right. See this B, which encompasses, same thing here. See that? These baby Bs or these lower cap Bs are always signs that this range up top here is vulnerable. It's just very vulnerable. And if it starts to move down and we see that move lower, it could be a very fast move on that. I'd rather see what we look at as a P, right? This kind of nothing on the bottom and the opportunity to move up into resistance here. So right now we're getting kind of on a weekly basis, this level that looks like it is vulnerable. And let's look at this on a daily basis here for a second. Let's put the radar back on. Yeah, it's a little bit better. This is a normal distribution right here. That one looked really good, really healthy. This one's got a kind of a double baby B, a B, and then down here again. Again, you got some good fat at about the $50 range, but something to consider when we're looking at these. Nokia, we saw this. This was kind of just stupid. There's that B again, right? That ridiculous level. Doesn't even get any shorter than that. Can't get any worse than that. That move up was vulnerable to move down. Right now trading even below that level of where the support is at 471, currently trading at 4.33. GameStop, same thing, looks the same. Crappy level of radar here. There's nothing going on. Once it, look at that, look at this. Once it got past, probably about right there, 240, gap down very easily to the 154, which matches up perfectly to what we're seeing happen in the chart here. And now you're on a level, potentially 45s are your level of support here. Really decent level of support right at, let's kind of look at that right there. 46, I'll call it 46. Let's just kind of put a bar here, quick right there, and actually it's maybe a little bit lower. 46, I would say 46. And if you really want to take it down, probably to the 43 range. That range about 43 to 46 could be good support. I wouldn't trade this anyway, really, unless you're just looking for a fun time to see what happens. I just don't see any real benefit with this right now. A couple of stocks came in here. Some of the small ones, again, similar. Kodak recently went up. Let's take off this. On some news that they had a partnership with Microsoft. This stock is manipulated, in my opinion, somehow by someone I'm not sure of, because it's constant that you see these really weird news things spiking up, coming back down. It's like they have a PR department that is kind of pretty good at what they do, but yet I would say that, a couple of times we've seen this height of the 14 level, can't get above it for whatever reason. Not sure what this company really has to offer. After this spike that screwed investors royally on some of the things that were going on, and this loan that was being given out, etc., this is kind of a dead stock to me. Workhorse, a lot of people took this into account, and I talked about this. We talked about this 28.92 level. That was really key here. Now we're moving up in the 41 and change after a nice breakout and kind of almost a flag pattern that I believe I identified with you last week, which I'll put back on the chart here. Wrong one. Wait a minute. Clicking around. Here we go. So kind of just this flag pattern, which is a terrible drawing right there. Flag pattern right there. Kind of moving up here. Somebody's mentioning my radar has less bars than mine, and you can see what is behind. Mine is blocks out much of there away or space. Your radar could be set to the transparency when you do on the radar. So you can do is take a look. Email us. We'll set up, Robert, a screen share for you, and we'll get in there and kind of take a look at what's going on. But what you can do is on your studies, you can edit your studies and come over here. And on your radar, we'll put that on for a second. Double click it. And I believe what you can do is, first of all, look at the number of bars. 30, 50, 20 is what I have on mine. 30, 50, 20 on the input. And the style, you can kind of move you may be able to move your transparency on yours. I don't know, but you shouldn't have any problem seeing it. Unless, I don't know why you would have any problem seeing it. We set this up so that you could see this. It's kind of on the clear side here. See that? So I'm not sure what's happening there on the radar. This is on the radar, right? Yeah. So you have it all the way to the right. If you notice that, that's set by our system. So you should be in pretty good shape, depending on what you're looking at, depending on how thick it is. So maybe that's something that you're looking at right there. I'm not exactly sure. So email us or call us. Anything that you need help with, we will help you with. All right, what are we going? Oh, Workhorse. Let's clear the drawings. Okay, here we go. Workhorse has been a monster, just an absolute monster. I talked about this post office deal they could have, but really what really happened there was that when President Biden came out with his desire to go all electric for federal vehicles, 625,000 or 650,000 vehicles, this really moved up. What else we got here? DM mentioned this one a couple of times. We were trying to clear this box area, clear decisively. Now you got some support that is hopefully going to hold about 25.33. This is a 3D printing company. Crazy name, we call it manipulated proteins, kind of like a Beyond Meat, Impossible Burgers, and things of that nature. This is Tattooed Chef. Momentum is starting to come down a little bit, so I'd be a little bit careful. If it can hold the level about 23.5 and bounce off, and we have a couple of different areas right here, 23.75 or so, that also looks like a good area. If you can hold on to that and move up beyond that, I think you got a good shot of the potential of it moving. You can see that also when you look at probably the radar, you know, above this level here. Look at all the kind of crosshairs and all that you see there. You start getting above the 26 level, though, looks like it could break out dramatically. So it's depending on the appetite for what's happening in the markets. CCIV, this is a SPAC that is looking for something to buy. The discussion is it's going to be Lucid Motors. If it does, it's probably going to go up. If they don't do the deal, it's going to go down. Pretty much as simple as that. Blink Charging, trading out. Edit, I've talked about this before. It's sitting on support right here. I kind of like this. This is a CRISPR technology company. If you draw a line across, we'll leave it on there right about there. You'll see that's holding support really well at the $60 level and change, $61 level. But if you kind of like connect the dots right there, you know, about 60, 61 is the area that I do like this at. I think there's an opportunity when we look at this. And when we look at overall this chart and we see what's happening, I think that what is the most interesting on all of this is that it kind of is settling in. And I like that. When we start this settling in, now I'd like to see the aileron start to turn up. I'd like to see the chart start to move. Keep an eye on this. Keep it on your list. TIGR, been an absolute monster. This is supposedly a Chinese Robin Hood play. Ford came out with their commitment to, I mean, who would have thought? They came in with a terrible loss. Company has had a terrible loss, came out with earnings last night. And now what are we seeing? We're seeing that things look pretty good because in the pre-market, they came out with the earnings with the loss. But yet at the same time, they're going to be ramping up, I think it's $29 billion of money going into EVs. So that's pretty good. IIVI, what is that? I don't know what this stock is. I have no idea. Holding support on an island up top here. I think it's vulnerable down to about 79 and change, but right now trading at 90. You got to decisively break above. Your aileron did shift over pretty dramatically. It's starting to come back, the momentum. If you notice that on the top here, starting to see it turn to the upside, turn close to the upside, still below the zero line, and that's an issue. Let's see what else I have here. Any other questions from people? Because we got a couple more here. GM. GM also kind of that same look we just looked at with that island level kind of crashing down a little bit after a big run up. This is interesting. You can kind of, I guess I can't call it a cup and handle because it's kind of a flat bottom cup and handle. Kind of this side is not built yet, which is what you'd want to see. You may see some more consolidation here, up about $1, 62 cents in the pre-market. I would expect to see that this momentum will continue on for a little while. I talk about this often when sometimes you see that going into a weekend, there's some concern. I don't know exactly what the concern would be this weekend going into what's happening out there. I would say that there has been a little bit of an excess run-up over the last week that seems to be a little bit pushed. People may be moving out of some of the meme names, covering, moving back into the names they're looking for cover in. I don't know. But I also don't see that at the same time, if I can find this, here we go. You know, the KRI that we look at, it's a +2. It's been there for a while here. So we're getting into all-time high zones, or we're at all-time highs with the S&P and the NASDAQ. The Dow Jones Industrial Average is not quite there yet. But at the same time, it looks to me like there's a lot of excitement about what could be a very quick stimulus plan with direct payments of stimulus coming out very shortly. So something to consider. Again, that liquidity is there. Utilize all of these. Get your free trials over on the TradeStation Trading App Store. Great stuff you'll find there. Make sure you look at this. Read all the information that is available on the site, as well as over on TriggerCharts. Check that all out. Listen, thanks so much, and have a great day of trading. I'm going to see you again next week.